I bought Tesla at $15.80 and today it's over $400. It changed my life. I'm Emlyn and together with these other stock picks, I retired at 40. But I didn't buy the Tesla IPO, I bought years later after the hype died. And I'm holding off on the $4 trillion wave of IPOs coming from SpaceX, Anthropic and OpenAI. Between them, they're selling hundreds of billions of dollars of their stock to you when the market is at an all-time high. Sounds great for the seller. In this video, I'm going to highlight 3 reasons this is bad for you, the buyer. Let me walk you through each. 1. The seller sets the price and moment to sell. The seller chooses when to come public, and it's almost always when it suits them best. In this case, SpaceX, OpenAI, and Anthropic have chosen to do their IPOs when the market is at an all-time high, and so is hype around AI. They then employ investment banks to work out how high they can sell the shares for. The banks get paid a fee for this, and it's their job to sell the IPO to everyone else. They act as salesmen painting the best possible picture for the product they're trying to sell, and they earn hundreds of millions of dollars doing it. There's nothing wrong with being paid for the service you provide. The buyer, and that might be you, just need to realize that the people selling you these shares have an incentive structure to get the best possible deal for them. And it's a lot of shares that will be sold. SpaceX is aiming for $75 billion. OpenAI and Anthropic have not disclosed how much they plan to raise, but it's expected to be similar amounts. Alphabet, the owner of Google, just raised $80 billion. That means nearly $300 billion of cash is being raised from the public on the promise of AI delivering massive future value. History shows most large IPOs trade lower within a year or two. If you're trying to buy into these IPOs now, you're buying at all-time highs from people incentivized to sell it as high as possible, and there's a lot that needs to be sold. 2. The future is always further away than promised. These IPOs are not selling you profitable companies today. They're selling the promise of huge businesses in 5 or 10 years. They're taking your cash today based on promises about tomorrow, and nearly all ambitious goals come with setbacks and delays. For example, in 2015, Elon said Tesla cars would drive themselves in 2 years. That was 11 years ago. Tesla's robotaxi is only launching now, and it's launching slowly. They probably are still the leader in autonomous technology, and this is still a massive opportunity. But it was an ambitious goal that was bound to be delayed. In the same way, not all the technical details have been figured out to have working data centers in space. The vehicle for getting these data centers to space is also not quite ready. SpaceX Starship development is continuing, but it hasn't reached the point of being able to land and relaunch. This is one of the core near-term goals of SpaceX. They say they could have data centers in space as soon as 2028. Similar things are likely to happen to the other companies. According to Anthropic's S1 papers, the document companies filed with the SEC before going public, revenue was $4.8 billion for Q1 2026. They also say the current revenue run rate is $47 billion a year, and they're projecting over $200 billion by 2030. At least they're expecting to make a profit soon. OpenAI is expecting similar revenue numbers, but they're expecting to lose over $100 billion in the next few years before being profitable around 2029. Those are huge projections from current loss-making numbers. 3. Euphoria is almost always followed by panic. We are in a period of massive hype around AI, but the market does not price things calmly when a narrative is this big. It overprices, it gets euphoric, and euphoric market highs are inevitably followed by panic crashes. I'm a long-term investor in Tesla. I bought it at $15.80 in 2019. There was no hype around the stock then. Everyone had written it off as it's about to go bankrupt, and they need to raise money to survive. Model 3 production was late, and they were building it in tents. It was an awful narrative, but the best time to buy. Less than 2 years later, the stock explodes, up 25 times. Suddenly, they're profitable, they're on their way to scaling to 20 million cars a year by 2030, and FSD was about to land. I can go on, but there was enormous hype around the stock. Coincided with the hype around the electric vehicle revolution in 2021. Quick side note, Rivian IPO'd that year with a valuation around $80 billion. Its value spiked to nearly $180 billion. A year later, it collapsed more than 90%, with the market valuing it as little as $11 billion at one point. Today, the market values it around $22 billion. Similar stories can be told of other EV manufacturers that benefited from the EV hype of 2021. But back to Tesla. 5 years later, in 2026, we are still waiting for most of what they promised. The share price has gone nowhere as a result. In fact, it's crashed 60 to 80% a few times because of events like the tech crash of 2022 and Elon's ventures into politics. My point is, the market constantly cycles through euphoria and fear. The euphoria could come from rapid growth or a milestone being hit, and fear could come from unexpected delays and setbacks, or world events like conflict, tariffs, and potential competition. Like when $1 trillion was wiped off of US tech stocks after DeepSeek from China launched their chatbot. It's during these cycles of panic when the best opportunities come. And I suspect over the next 5 years, you'll be able to buy into these companies at prices much lower than the IPO. Because on a fundamental level, they are loss-making today. The valuation is based on promises for the future, and anything that threatens that future will cause wild drops in the share price. How I'm positioned instead. While I'm holding off on these IPOs, I have a lot of skin in the game in the markets. Tesla remains my largest holding. Their robotaxi service has launched. I bought at 1580, I've held through the swings, and I'm still holding. I'm happy with SoFi being my second largest holding because legacy finance is ripe for disruption. Again, I didn't buy SoFi when it IPO'd in 2021 at over $21. I bought it at $6.76 when the stock crashed a year later. 5 years after the IPO, it still trades below its IPO price at around $17 currently. But it's the fastest growing bank in the US, growing at over 30% per year, so I'm happy with it. Palantir was another one I bought in the tech crash of 2022. I bought it at $9.26 and I sold it last year at $123.95. At $123.95, it was up 13.3 times and my investment thesis had played out. How I bought these wasn't luck. It came after doing a lot of work on them and applying a principle-based framework. You win big not by trying to predict where anything is going to be in the future, but by picking the right company to thrive in our current environment. It's like no one knows what the weather is going to be like on the White Mountains of California on any given day next year. But we understand that it's a harsh climate. And if we plant a bristlecone pine tree there, it thrives for thousands of years while everything around it dies. My framework does the same thing. It uses first principles thinking to find companies that will thrive in our current environment. If you want to know more about how it works and how I apply it, go watch this video where I go through it in detail. It goes through how to find 10x opportunities, when to buy, how much to buy, and when to sell. If you like this content, please like and subscribe. It lets me know that you found this useful and I should make more content like this. In this uncertain world we live in, may you find the financial freedom to live the life you want to live. Good luck.